Hello everyone, this is Paul from the APN Academy, and in today's video we're going to be studying about something that is very easy yet very difficult for most traders to identify. And what is that? Identifying highs and lows in the market, right? Most traders do not know what is the correct low or the correct high that I'm supposed to be identifying. And why is this so important? Because these are the areas whereby we do take our trades from, right? So we're going to be focusing on majorly two things, right? That's going to help us to identify highs and lows properly. Some of you call them swing lows, some and swing highs, right? Now, what are these two things that we're going to be focusing on to help us? The first one is the type of market. This one I've been talking about it in our previous videos a lot, so we're not going to spend a lot of time on it. Where we're going to spend a lot of our time is this second one here, this number 2, the turning points. Why are we going to focus so much on the turning points? Because it's because of these turning points here that we have structure. It's because of the turning points that we have M's, W's, because of the turning points that we have the highs. It's because of the turning points that we have the lows. It's because of the turning points that we have the swing lows and swing highs, right? So we're going to be focusing so much on number 2. Number 1, we're just going to go through it because most of us know it. And number 1 is made up of number 2. So number 1, we're just going to go through it just to do a recap of the types of markets, but we're not going to spend a lot of time there, right? So without wasting time, let's just go into the theoretical part. As usual, we start with theory, then we go to the practical bit of it on the charts, right? Now, what are the types of markets that are available? Like I said, I'm not going to waste a lot of time in this one here because we all know it. Now, we have uptrend, we have downtrend, and we have the ranging market. Now, why are we speaking about these types of market here? We already know them. It's because this helps a trader to identify where he or she is supposed to be positioning him or herself to take trades. We have reversal traders, we have continuation traders, we have traders who trade, no matter the type of method you use to trade, that method of yours is formed by turning points. Now, what do I mean by turning points is, for example, if the market has moved up and then comes back down, this place where the market started dropping from is what we're calling a turning point, right? Or when the market starts continuing up, where the market came and turned when it was coming down and then turned to start moving up. This is the point we're calling a turning point. These are turning points. And they are very, very important that everything comes from them, right? Whether you're trading higher highs and higher lows, lower lows and lower highs, they're formed up of turning points. Even M's, you see, M is made up of turning point. This is a turning point, turning point, turning point, turning point, right? So everything, most of the things in the market are made up of turning points. So that's why I'm speaking about this. Now, uptrend, what do we have there? We have a market in an uptrend. The market is making higher highs and higher lows, right? This one we all know. What about in a downtrend? What's the market making? The market is making lower low, lower high, lower low, lower high, lower low. And in a ranging market, what is the market making? Let me just clear this. In a ranging market, the market is making equal highs and equal lows. We now all know this if you've been watching our previous videos. And if you've just come across this our video for the first time, make sure you check our previous video so that you can relate, because all our videos are somehow related and they can help you to move your trading to the next level, right? So now, having known these types of markets, like I said, we're not going to so much focus on these types of markets. We just want to know the types of markets we are going to be identifying the highs and lows from, because the highs and lows are made up in these markets. Either the market is trending upwards or it's trending downwards or it's ranging. That's why I just wanted to mention them. But now let's go to where we're going to put much of our focus, and that is the turning points, right? Now, under turning points, what are we so much interested in? What are you supposed to be so much focusing on? One, you're supposed to be focusing on like the significance of a turning point. Now, what do I mean by significance? By significance, let me just illustrate here. By significance, I mean this. For example, when we're illustrating higher highs, higher lows, higher highs, higher lows, higher highs, and higher lows, this is how we are marking, right? And most books are showing you like this. But actually in the market, in the real market, as you've been seeing, or if you've been trading, this is not how smooth the market moves. Now, by significance, we want to see the push that this turning point is going to give, like with what importance is the push that the market is giving, right? Now, we have already mentioned that the market does not move smooth like this. So meaning that in this move up, when the market is creating this high, it's moving while creating also something, it's creating its own highs and other small highs and lows, right? So when the market gives us all these turning points, we want to identify which one made the move or a retest that was very important. For example, if the market is making this high, it's moving up, right? But it's making smaller highs within it. Then also when it's coming down, it's making other lows within it and highs within it. So we want to identify the highs. Out of all these highs here, which high really gave us a push that was meaningful? By significance, we're meaning that which one was a meaningful turning point. Are we together? But now, what are we going to focus on to say that this was the meaningful turning point, or this one was not so significant, or this one was also meaningful? Is by the strength, bringing up to number two, is by the strength of the push that the turning point is giving. Now, what do I mean by push is in an uptrend, we're making higher highs and higher lows, for example. Now, the strength of this push down here from the turning point is what we're going to consider. We want a turning point that is giving us a very, very strong push downwards when it's retesting, right? I'm not meaning that the momentum is very high. Please be careful that. I'm not saying the momentum is very high on the retest. I'm saying the push is strong, meaning that the presence of sellers should be more than others. For example, here the market created this turning point and then pushed up down. Let's say the market turns from here and then starts moving up to create another turning point. Then again comes back down, starts moving to create this point down, right? Now all these are highs. You're right, all these are highs. But when you're marking turning points, because these turning points are what we're going to base on to take our trades. Some of you are reversal traders, some of you are continuation traders. You're going to base on these turning points. You're going to base on these higher highs. You're going to base on these higher lows, or lower lows and lower highs, right? So you have to make sure you're identifying the correct one, whereby you're going to be basing on take your trades. And which one is going to be correct one for you, which one is going to make more sense to you, is the presence of sellers. Remember, these turning points are showing us that at this point, they are sellers. At this point, they are buyers. Are we together? So we want to identify that one, that particular turning point that has more presence of buyers, or it has more presence of sellers, so that you can mark it, and that's what you're going to be focusing on. The moment you mark a wrong one and you start looking for patterns at that point, you're going to have false breakouts, you're going to have bad entries, you're going to have poor risk to reward ratios, and that's when emotions kick in, you start closing trades early, yet actually you're correct. Your analysis is correct, it's not wrong, right? So by significance and strength, we want to see a turning point that gave us at least a strong push down, right? To show you that sellers around this area are more than sellers in this area here. So we're going to consider this turning point here. Now, this will be our high. And then this one, which pushes the market significantly up. Now we know the meaning of significantly. Like the one which is showing that in this area, there are more buyers than at previous turning points, right? At this turning point, there were buyers, yes. But at this turning point, there are more buyers. Why? Because it even pushed the buyers from this point, pushed the market to creating a new high. So this will be your low. Now, when we create this higher high, still we repeat the same principle. Here, there are more highs that have been created. But which high is that one that has more, it has presence of more sellers capable of pushing the market a bit more down? So that's the high the turning point that you're going to identify. I hope we're together. So we shall ignore all these turning points and we identify them that push the market more down, right? Now, again, when the market is coming down, we have lows that are being created, right? But which low is that gave you a more push, that gave you presence of more buyers? For example, let's say all these were turning points, they're retesting, making lows while retesting and like that. These are all giving us pushes of buys, but they're not significant. So we're going to look for that one that's going to give us a significant push. And for that case, where we identify that there's a significant amount of buyers at this turning point, that's going to be your new higher low. And why is it a higher low? Because it is higher than this previous low. And why is this one a higher high? Because it is higher than this previous high here, right? And also one thing that I would like to make clear to you guys is people think that when the market is coming to retest from a previous high, let me just clear this so it's clear a bit. When the market makes this high, right? This is a high and this is a low. and the market goes up. People think that automatically the market has to come and stop here. No, the market has a room. It has a room of this high and this low. What do I mean by that? What I mean is that from this higher high here, the market may decide to move and stop in between here. So as long as the market has not taken out this previous low here, the market can still continue in an uptrend. This is another big mistake that traders are making. Traders think that the moment this high has been taken out, now automatically the market is going to retest and then you're going to sell, right? Yes, it may sell, but for a short time, and you find yourself being taken out, right? Because the market has found a new higher low here and it pushes it up, right? So that's why I'm emphasizing the significance of these turning points here. Are we together? Then another, you're going to look at the momentum caused by that turning point. For example, if the market is moving up and then suddenly we get a turning point that pushes the market down a bit more than these other ones. Now, this momentum here is telling us that there are sellers here in the market, yes, but they're not as more as these sellers here. Remember, we're saying that one, significance and strength. Now, momentum contributes to that, right? So we're looking at the distance that the sellers or buyers are covering. For example, if I'm in a downtrend, right? If I'm in a downtrend, now the buyers came into the market here, but they didn't push the market significantly enough. Their momentum was weak, right? Again, the sellers continued. Again, buyers tried to come in, but then buyers come here and show that at this point here, the buyers at this point have strength. They push the market slightly up before again sellers taking over. So this will be our significant turning point. Why? Because of the strength here, because of the momentum that has showed compared to these other ones. Here, the momentum was not good. The momentum was not good. Here, the buyers at this point are communicating that for us here, we're a bit more powerful than the ones before. By before I mean this turning point here, I mean this turning point here, right? So the ones at this point here are showing more significance and more presence, right? So these are the turning points that we are going to be considering. Now, this is all theory, or you might have gotten confused or lost somewhere. Let's go to the chart and I show you exactly what I'm trying to explain to you. Okay, so today I'm using the trading view. So we are going to take examples from this point here until this down place. We don't know that this already happened, but we're just going to use it for illustration purpose. You can clearly see the market is making lows here, but you can clearly see as the market is moving, it is creating several lower lows, several lower highs and all that, because we know in a downtrend, we're making lower lows and lower highs. Now, which one is correct or which one is more significant that you can start looking for your trades from? That's the purpose of this video. Starting from where my blue vertical line is, let me just delete this. We want to identify the market went up, right? And created this high. So we're going to focus on this high here. Why? Because its strength was a bit more. Are you seeing? It pushed the market down more, right? Then also, we're going to identify this turning point here. Why? Because it gave us a strong return upwards, right? Now, the reason why we're not considering these ones here is the momentum was not there. There are buyers at this turning point, right? The buyers are there, yes, but they're not so strong. The momentum that they gave us was not good, right? Their strength was not there compared to this one. Look at here, there's just a few buyers came in. These are all turning points, yes, but they're not so significant to us. So if you take trades from these turning points, there are higher chances you're going to get stopped out, right? When the market came here, these buyers pushed the market until this point again, right? Then also when we're coming down, the market was creating lows, right? It created lows, right? But these are all points that are weak, not compared to these previous ones that's what identified, right? Now let's see how price reacted to these significant points that we had identified. Now when the market reached here, it reacted to this point, right? Then the market came back, again reacted to it until it broke it and then it retested, right? But this is not a proper retest. The market continued down. Now the market broke down here. What did it do? It created for us a turning point that pushed the market aggressively up. Are you getting it? Now the market pushed the market aggressively up. We can consider this one because the momentum was really strong, right? So we can consider this standing point here, right? Let's mark it and then you see what I'm talking about. Now, in the process again, what did the market do? The market came and created for you a higher low. It again pushed the market up significantly. So this can also be a turning point, right? Then again, the market was pushed and failed to take out this previous low here. Then came and created a higher low. Now, if you're to observe this, it's creating, the high is not being taken out, but it's creating higher lows. So this is communicating to you that a pattern is being created. We identify patterns by marking using diagonal lines, right? So in this case, we notice that the high is not being taken out, right? But it's creating higher lows. So we want to see that we want to identify if the higher lows are not going to be broken or this high is going to be broken. So you can mark using your trend line, right? Are we together? So in this case, the market came and broke the trend line, the series of weak higher lows that the market was creating. Why? Because it was not taking out the previous significant low that we had identified, I saying, but then it was creating weak higher lows, right? Now, the market came, when it reached this significant level we had identified, what did it do? It reacted to it, then finally broke it and retested it. I saying, when it broke this level, it retested it to show you that this is a significant low. And then again, sellers took over. Let's also identify an uptrend so that I can show you. Now here, we do have an uptrend here, right? Let's just use this as an example. Let me just increase the size of the candles. Now, what do we have here? The market gave you this low here, right? Let's start from this low here. Let me just mark from here. So the market gave you this low here, pushed the market up, create a significant turning point, right? So I'm going to mark this turning point here. And then came back. Why is it significant? Because the market, when turned from here, it was pushed back all the way down here, right? So you have two significant turning points, this one and this one here. Meaning if you're trading, you're either waiting for a breakout of this level or the market should bounce back and come back to this level here. So when it reaches this level, it should either play and consolidate within or it should break out. Right together. At significant turning points, you're waiting for the market to give you a reversal or to give you a breakout. And for this case, what did the market give you? It gave you a breakout, right? This is an impulsive move. And we have made a video on impulsive moves before. So if the market gives an impulsive move, we are going to use what we call the Fibonacci retracement tool. So we can apply it here. In case you've not watched our Fibonacci retracement tool video, make sure you go and watch it. So we can apply our Fib tool here and we mark our levels that we're interested in. We said we're interested in this 38, we're interested in 50, and we're interested in 60, right? So we shall want the market to touch one of those significant levels. And which level did it touch? The market touched the 38 level, right? So making this one also a significant level. So when the market touched here and bounced up, but where did it turn from? It turned from this significant level here, where the market pushed it down, right? So here you have this level and this level here, right? So the market came, tried to react to it, but failed, came back to this point here. This point held it. When the market reached this level here, sellers tried to come into the market, but buyers overpowered still, right? So where you have to be taking trades at significant levels, not just any turning point, right? Now, again, the market gave us an impulsive move. So we are going to again draw a Fibonacci retracement tool from there up to here. You can again mark your significant levels. Now, for this case, we'll just mark on this one because we can clearly see that the market reacted to it, right? So we're again going to mark the 38 level. You can clearly see the market again created this significant turning point. But before creating this significant turning point, we do have a series of turning points. We do have this one. We do have this one. We have this one. We have this one. We have this one. Now, out of all these, we have this. Look at the momentum and strength. This one down. It was weak. Momentum and strength tried a bit to gain. Momentum and strength was a bit bigger than all these, right? What about this one? Still bigger than all these. But which one gave you a significant push to the area of Fib that you're interested in? It was this turning point here. So meaning that this is going to give us our significant turning point, this one here. So this is then giving us a significant turning point. And what shows that it's really significant is check how price came and reacted to it here and reacted to it here. I say, why is it not reacting to this one? Why is it not reacting to this one and reacting to this one? Because this is the area which has more presence of sellers. And when the presence of sellers is broken, what do we expect? We expect a retest to it, which the market gave you there, right? Now, when we extend, let me just clear this. When again we extend here, we clearly see that which out of all these pushes down, which one has a bit significant that gave you a push to retest this area here? It was this turning point here. So this is the significant turning point for you here. Then you'll mark it, right? So we can mark it, and this will be your high. So to determine whether the market is creating a higher high or higher low is basing on this turning point here. And you can clearly see that here the market created for us a lower high, right? And then again, the market came back to retest this lower high here, like this, right? Making it this high to stand out that the market did not take it out or did not create double tops. This is an indication of a reversal. Now, once you understand all these aspects, you will be knowing where the market is giving you significant turning points, where you should be looking for your shapes, where you should be looking for your structures. And instead of looking for any turning point, do not just look for structures at any turning point, right? So make sure you identify strong levels that has presence of buyers, enough presence of buyers or enough presence of sellers. You can do this in any time frame, right? Because some of you do analysis in H4, some of you do analysis in daily, some of you do analysis in weekly and all that. So you can do it in any time frame, right? But remember that the turning points in your entry time frames are specifically for entries. Still the same principle applies, right? The same principle applies. You're not going to want to take a trade where even if it's your entry point, whereby there were a few buyers or few sellers. You want to take a trade at a point whereby there are very many buyers or there are very many sellers, right? So that is it for today. And I hope you guys can utilize this. Hope you guys can backtest it. You'll be able to see the mistakes you've been making. Backtest it, do enough practice on it. It will make sense to you, right? So if you found value in this video, do not forget to click the likes button. And if it was your first time to come across our videos, please, we request that you do subscribe because it will help also others to come across such videos, right? Have a great day, and I hope you guys can utilize this.